Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week by Paul Strome. And of course, over the last 7 days, we've seen more kind of focus on the economic woes as the Bank of England warned of the longest recession in 100 years, raising rates to 3%, which was a 75 basis point rise, one of the largest rises over the last 30 years. And it'll be interesting to see how some of these, negative macro views are coming through into the marketplace. We'll have an early opportunity to assess that, looking particularly at CE markets with our CE investment briefing this week in London. So it'll be great to get the views both of the London market as well as those speakers traveling from CEE, just on what their view is on the ground and what they're expecting to see, particularly in terms of, I suppose, pricing and also activity in the market over the next 12 months. Paul, what have you been seeing?
Yes, the 20th ULI PwC Emerging Trends in Real Estate Europe 2023 has been published, and it's a survey of 900 real estate professionals, which found that the industry expects a tough year ahead, reduced finance, declining values, and looming recession. 71% of real estate leaders believe Europe will move into recession before the end of 2022, and that's according to the survey. A fall in values is inevitable, according to respondents, and pricing between prime and secondary real estate is expected to widen. Expectations around the availability of equity and debt have sunk to their lowest level since the global financial crisis, so not good. There are bright spots, though, where overwhelming demand looks likely to trump recession for the foreseeable future. Residential is obviously one of those, and for example, this week, we saw Pension Insurance Corporation has forward-funded the developer Court Collaboration's One East Side, which is a 154-metre-high residential tower being developed beside Birmingham's Curzon Street station, which is one of the new HS2 stations, which is currently under construction. That's a £200 million deal. One East Side will be the UK's tallest build-to-rent tower outside London, and will provide 667 apartments. Other area is energy infrastructure, another area of activity likely to persist through the recession. This week, we heard that Garbe have announced it's pooling its infrastructure and renewable energies business activities in a new spin-off company, Garbe Infrastructure. The new company will concentrate on photovoltaics, charging infrastructure, and biomass developments as well. Also, Resolve Energy, a clean energy power producer owned by infrastructure investor Actis, acquired the rights to build and operate a 1 gigawatt solar voltaic plant in Western Romania. It'll be the largest PV plant in Europe, and it's expected to be online by 2025. Construction will start during the first half of next year. The project will have 1.6 million solar panels and generate 1.5 gigawatts, enough to power more than 370,000 households. Actis said the project will adhere to the highest environmental social governance standards, and then will integrate with agriculture activities on the site. It's on poor quality land, and they'll use sheep to clear the grass between the panels. The project will also incorporate beekeeping and other measures to increase biodiversity. And also this week we saw that Thor Equities has completed the acquisition of a former Coca-Cola bottling plant outside Madrid. Thor has acquired the asset from Geneva-based Stoneweg as a basis of a €600 million data campus. Stoneweg disposed of the former bottling plant on behalf of the Icona Capital Group. They had only acquired it in 2020, which is something we reported at the time. Icona is an independent investor controlled by Max Hervé-Georges. That's headquartered in London. Thor Equities signed a contract to acquire the site in May when it announced plans to develop the data center campus, which is called Madrid 1, and it'll be the first asset for Thor's specialized data center division, Thor Digital. The first phase of the campus will provide 20 megawatt IT load, growing to over 100 megawatts, and will be one of the region's largest data center campuses.
Yeah, there's going to be a huge focus on data campuses, data centers. Certainly a big focus on that from a number of the logistics companies as well, I think. So that's something that we'll really expect to see growing in 2023. 2023. And you mentioned residential, and I noticed that CBRE Investment Management has acquired a mixed-use scheme in Berlin, very close to the German Parliament building, with the idea of actually converting some of that to residential. So we can see there, picking up on that theme of demand for residential. I also noticed in the news Greenman launching a property and financial management unit, and always interesting to see what Greenman are doing just as an Irish business focused on grocery retail in Germany. So always interested to track what they're seeing. We've mentioned sustainability and impact, a great deal over the last year, and interesting to see Orchard Street, a new impact fund there raising 90 million at first close, and a big focus there on the transition. Also, thanks very much to Aviva Investors for hosting their second Sustainability Media Awards, and great that impact was recognized there. So thanks very much to Aviva Investors for that, to all of our partners at Impact, and also congratulations to all the winners. Thanks very much, Paul. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.